If you own or rent a home, brace for impact. This afternoon, the Reserve Bank Governor is poised to ready, aim and fire back at the government's borrow and spend budget, which bank economists say could stoke inflation and could mean that mortgage rates are pushed higher for longer by the Governor, Adrian Orr. But Finance Minister Grant Robertson is assuring us that his budget is well prepared and won't stoke inflation. If mortgage rates go up even further because of your budget, would you resign? Is that? I mean, it's a cost of living crisis. It's the number one problem that people have. You said it was going to be your number one priority.
I don't think it'll be helpful at the moment for the Minister of Finance to resign. What I think this budget does is actually show a pathway where inflation does come down.
So what will happen today and what impact will that have on the housing market? Will it be 25 basis points? Will it be 50 basis points? Let's talk to economist Tony Alexander, who joins us live this morning. Good morning.
Morning, Ryan.
Thanks for being here. What are you picking will happen today? What do you reckon?
Well, I think probably only 0.25% increase, because I actually think the Reserve Bank Governor got some pre-venge in back on April 5 when he increased by 0.5% and not the 0.25% we were expecting. I'd say he was already getting in ahead of an expectation that there will be some loosening in a Labor government election year budget. It was sort of a no-brainer, really.
So it's already been factored in. A lot of people are still waiting to, have their rates refixed, right? So this is going to affect a lot of people, potentially, what happens today.
And that's something the Reserve Bank will think about, because monetary policy doesn't act immediately. It takes sort of 18 months plus, and they'll be aware there's quite a restraining impact on the economy to come from almost $170 billion worth of mortgages rolling into higher fixed rates. People are increasing about 3% or so. So they may actually not want to aggravate what is already going to flow through the system, hence probably 25-point increase. But if they go 50, maybe that's the end of the cycle. We'll simply have to see.
Do you think we're that close?
Oh, we're very close to the end, yes, I think, because we can see some of the inflation indicators are coming off, but not at a fast enough pace for the Reserve Bank to say, yep, it's looking sweet. You can anticipate lower interest rates. I think we're many months away from that.
Your specialty, well, one of your specialties is the housing market. And you hear from some bank economists that we've bottomed out. You hear from some property experts that we bottomed out a couple of months ago. Others say it's still to come. Where did you sit? Yeah,
we're somewhere in the middle of it at the moment. And we will only know by looking back and go, that's when we bottomed out, as the Australians have just done sort of, 2 months after the event. A key thing I'm pointing out to people is it really depends upon when average Kiwis react to some pretty big things. At some stage, they'll realise we're not all disappearing to Australia. There's a lot of migrants coming in from the rest of the world. At some stage, the outlook for interest rates gets better. You put these things together with the 2-year build-up of people who have wanted to buy, but they haven't bought in 2021 because prices were rising strongly and nothing to choose from, and they haven't bought in 2022 because why buy if it's going down in price? At some stage, that 2-year queue of people gets activated, and that will cause, I think, an interesting recovery in the market.
A quick one, do you think, on that basis?
Yeah, I'm veering towards, actually, maybe once we get the election out of the way, I think this 2-year stack of people, like I say, start to come back into the market, because people have had their lives on hold for 2 years waiting for the market to, settle down.
And when we start going, does it go back to the highest peak after COVID? Does it go halfway back there? Where do you think we get to?
Well, it's sort of easy. We definitely exceed where we were previously. It's a question of, will that happen within 2 years or 5 years? And that's something I think most of us have proven we cannot predict exactly what's going to happen with those prices.
Let's talk about renters, because a big portion of the market, particularly for younger people, is renting at the moment. So give us a sense. We've got migration increasing, which means that there is more pressure on rentals.
Yep.
But at the same time, you've got the government's tax changes, meaning a lot of those landlords are wanting to sell off. So could we see a real run on rents because of those two factors?
Exactly, and if you look at the first home buyers who have already come back into the market buying properties from about 4 months or so, I think they are feeling the impact of, well, prices are cheaper for buying, but rental accommodation is starting to tighten up. The government has actively incentivised investors to leave the sector, and so they are increasingly, I can tell from the survey I do each month with Crockers there, that they're concerned about the loss of the interest expense deductibility. They are finding it much, much easier to get good tenants, and so you balance that equation perception of, oh, it's getting harder to rent and prices are cheaper now, more young people will flow back into purchasing property. And all I can say is that maybe it's a good idea to take advantage of this opportunity when listings are still high there. Banks are increasingly willing to lend. They're just not discounting their interest rates at the moment because they upset the Reserve Bank 3.5 months ago when they started doing that. It's been an interesting dynamic.
Yeah, have you noticed with the changes to the bank, are they loosening with the lending?
Yep, I can see that, and I've got 5 monthly surveys, and in 3 of them I can see the feedback that, yeah, money is becoming more readily available over and above some of the tweaking of the Credit Contracts Act, etc., and the LVR change probably come on June 1 as well.
I was trying to find your Crocker's report actually to hold up to show people, because it is a really good read. How often does it come out?
Once a month, basically, and I ask about 3,000 investors. Can they find tenants easily? Are you looking at selling and buying? And overall, they are starting to look at doing a bit more selling out there. It's simply the interest rate pressure and the tax change, which is really biting into them.
Absolutely. Tony, thanks for coming in. Great to see you as always. That is independent economist Tony Alexander with us this morning.